Hi, thanks for tuning in. This is a weekend review for the week ending January 13th, 2023. We've got a chart of Bed Bath & Beyond up again. Real interesting that last week's video I started with this same chart. The memes got the bid. Call it the January effect, call it whatever you'd like, but they're rotating them around. It's possible that they're done. That's definitely possible. You zoom into the daily here. And you see a move from 1 to 5. Just to point out, the last time you had a move like this was last year in July when the market was bottoming. And she went 15 bars, 560%. Right now, we have 4 bars, 360%. So it's a much, much stronger move. If you just get a mirror image of the move, $8 could be in play. Let's take a look at the S&P 500. But the idea, the point of me bringing that one up is so that you start searching around for what could be moving next. Not that these things are going to go up forever. They're probably going back down. But just so that you can see that they're covering and that there is participation at a broad level on this rally, unlike the other rallies. Here's this long-term trend line again. Taking a look at the S&P 500 on the weekly. Right back at this long-term trend line. Even this trend line here, if you want to call this your left shoulder, your head, your right shoulder, we're right back up at it. It doesn't matter how you draw the damn thing. It's all subjective. Right, they undercut these lows each time. They even overshot. We're coming right up into this, and they did fill this gap. So gap got filled. And the target for this balance, this little bear flag, is right up here at 401. You look at the weekly, though. I do love the volume. You have declining bear volume and now increasing bull volume. That is what you need to see. And if the bulls get above really 410, that's the number. They get above 410, this thing's heading to this gap fill up here at 425. And you would have a much better picture. Right now, the risk is still very, very confusing until you can get above 410. It's possible this is just a retrace of this bear move that just happened. You zoom into the daily again. You do have this move straight down. Let's turn after hours on. You can see we've retraced the 61%, 399. So if they get above 399, there's a good chance they're going to go all the way to 414. But still in this longer term downtrend. And you can see this across the board. Right, still in the longer term downtrend. SMH still trying to carve out the inverse head and shoulders. PPO up, ADX up, everything you want to see. IWM, though, outside the long-term downtrend, broke it. We zoom into the weekly. Volume is what you want to see. Did we get this triangle? Did the triangle play out? A, B, C, D. I don't know. Or is this A, B, C, D, E? This big thing lowers your A, B, C, D. Each wave getting smaller and smaller and smaller. I don't know. It's all subjective. What I do know is that they're breaking above this longer term downtrend, and the momentum is about to cross zero. Histogram is positive. ADX and PPO are pointing up, and she has recaptured all the moving averages on the weekly. That is bullish. Throwing the ball around the horn. SMH did the same thing. Finally captured the declining 50. PPO and ADX both going up. Bullish. I want to point out, we had a breadth thrust. We had a whole bunch of them. So AAII sentiment The S&P returned 4.6%, yet bull bear spread is still 15% bearish. This is a sign of disbelief. Every time you've had this occurrence, you tend to get a pretty big rally. It generated breakaway momentum for the 25th time since 1945. Here's what that looks like. And even then, you still got a 10% rally with the worst one here. Now, if you look at this with a little bit more context, you can see all the dates posted out. Either way, it tells me to be open to the idea that this could be the beginning. 10-day average advanced decline rose above 60 yesterday, which is a long-term bullish breadth thrust, but short-term has seen market pullbacks. You got a couple of these here at the top. This is a monthly chart that shows a breadth thrust with stocks above the 50-day moving average. Also, pretty good look for the bulls. Let's take a look at sector performance. So what does this say when consumer, discretionary, financials, real estate are all outperforming consumer staples and healthcare? I want to go over here and take a look at that. Okay, so this is consumer goods versus finance. Clearly favoring finance. And why are we looking at this? Well, because in a recession, the only two things that tend to do well are utilities, healthcare, and consumer staples. But really, these two green. Okay? And in the early cycle, the rebound cycle, where you would expect to see a breadth thrust, you want to make sure that financials, real estate, consumer discretionary, IT, industrials, and materials are all outperforming the recession cycle sectors. And we can do that right now. So obviously right now you've got, let's take a look at IYK and let's just compare it to the other ones. IYK versus XLF, clearly favoring financials. Versus consumer discretionary, looks like we lost an uptrend. So this is now favoring consumer discretionary. No longer is it favoring the recessionary sector. XLK lost the uptrend here. Now it's possible that we'd like to see a break this low, but really look at the momentum on all of these. The momentum is accelerating down at a very, very large rate. Loss of uptrend. Very obvious loss of uptrend. You see this higher low pattern? It's broken. We can zoom into the weekly and you can start to see the same thing. This long-term uptrend that was in play for all of 2022, the recession that just took place, at least technically speaking, has broken. Here's another one. Why is it that materials are outperforming consumer goods? Right? And you'll see all of these are right here. You can go do this yourself. Basic materials, industrials, IT, consumer, these are all early cycle. Healthcare and energy, consumer staples and healthcare are late cycle. Yeah. I mean, this has been destroying energy. And let's take a look at the other one, healthcare. And let's start comparing that against all the other ones. Yeah, broken the uptrend. Done. Momentum, firm down. This is a downtrend. You do not want to own healthcare. All right, let's compare it to real estate. Is healthcare performing better than real estate? No, this looks like a double top. This looks like a downtrend. A low, a lower high, a lower low. Momentum accelerating lower. basic materials, destroyed healthcare. And remember, this thing was destroying everything else. Healthcare was destroying everything else. And now it can't catch a bid. Downtrend. So all of these, again, I'm just focusing on where we are in the business cycle. From what I can tell, the things that did really, really well last year were only things that did well in a recession. And now those same things are getting destroyed by what does well at the early cycle. So I'm not going to focus too much more on this, but I want to point out that we have about 5 or 6 different breadth thrusts, all saying keep an open mind that the bottom is in and higher prices are likely. We've got a bunch of charts that are breaking downtrends. Here's the macro downtrend. It's right here. This is the long-term downtrend from the beginning of 2022 when the recession started, or at least when these things started underperforming stocks and sectors that do well in a recession. Now, you have the volume that's supporting higher prices. You have ADX going up. You have PPO going up. And you have a capture of the downtrend. And you have this on the sectors at which it should happen. Which sectors? IWM, IYT, the transports. Why these? Because these topped first. Transport, this is how you tell that the stock market's topping. You're going to have the transports, you're going to have small caps. Those are all going to top first. And if you go look at the charts, you see that. S&P 500 topped right here, January, right here. This was already the third lower high or the second lower high on the transports. And if you look at IWM, right here, this was the bull trap. So really, IWM didn't do anything for 9 months, 8.5 months, breaks bull, and then instantly sells off. And over the course of 1 year and 7 months, declines 30%. That's what a bear market looks like. A period of sideways consolidation, a bull trap, and acceleration lower. And now we have a period of sideways consolidation, a bear trap, and consolidation higher. And if you zoom out all these charts, you'll see that really all that's happened on all of these charts is that PPO has gone from extremely overbought back to the zero line as price has reverted to mean in an uptrend, which is the 50-period moving average. And this is true on every single chart we've looked at. 50-period moving average, zero line in PPO. 50-period moving average, zero line in PPO. And this is the same across all the sectors that we look at. IWM went below, IYT, 50-period moving average, PPO reset to the zero line. And again, this is what you want to see on the daily. Look, you saw this happen on the daily, right? Breadth thrust higher, transports outperformed, PPO resets to zero line, and the 50-period moving average, and then a new breadth thrust comes in. And now, on what was the weakest sector, what was the sector that topped first, is now leading higher. And so this is very, very, very bullish from where I sit. And ADX is confirming that this is a trend, right? It is above 30. All of this was saying correction in an uptrend. Okay, so you have to be open-minded that when IYT, when XLF, VCR, XLK, XLRE, XLB, IYJ are all outperforming, your healthcare and your consumer staples, that we're actually starting a new bull run. Okay, I don't want to beat this one too much, but that's really the whole point of this video this week. I'll now go into some names that I still like. I still like NVIDIA. I still think that this is an inverse head and shoulders. I think you had the declining bear volume, and now you've got the bull volume coming into play. You had this move here, 75% gain. You now had a 50%, 61.8% retrace to the dollar, by the way, to the frickin' dollar. 138.60 was what we were looking for. You got 138.47, and now we've rallied straight up and recaptured all the moving averages. PPO is up, ADX is up, histogram is positive above all the moving averages on the daily, almost all the moving averages on the weekly, and all the moving averages on the monthly. So again, for NVIDIA to really confirm this inverse head and shoulders pattern that we've been talking about for a very long time, she must get above this neckline up here. Okay, so what's likely to happen is get a big rally and then another pullback. That's what I'm seeing happen here. Big rally, come all the way back up, and if you turn off after hours, you'll see there's a gap up here. I don't see why she isn't going to 176 this week. From there, she could even tag this line again, pull back, and see if they can really make this trading range that she's been in for a long time history. I love Crocs. We've been talking about this one for a long time. I'm still long Crocs. From where? From this inverse head and shoulders pattern. I bought the right shoulder. I doubled down. Got lucky that I was right. Again, I was using momentum and ADX to tell me back here that the odds favored higher prices. If you look at the monthly, you had the same thing. PPO got to the 0 line. It reset to the 50. And again, you don't need this on the monthly, but when you have it on the monthly, it means that the weekly and daily have much higher odds of buy the dip. And if you don't have this on the monthly, it means that there's likely more downside coming for whatever it is you're looking at. When you look at this, I don't see why this can't be a V-shaped recovery all the way back to all-time highs. One big, two, and all the way up. All right, 3 thrusts, right? We see clearly one, we see clearly a second thrust, and then one more thrust, and this thing is done. That's all you get is 3. OII is another name I like a lot. PPO reset to 0. Bull. ADX going higher with PPO. Histogram positive above all moving averages except the 200. I'll give you that. It's not as clean as the other ones. Broke this long-term downtrend and closed weekly above 1820. This looks like a breakout. As long as 1820 holds into end of month, this is something that you should be buying, at least how I look at it. And the target is the monthly 200. The target is $28. So what does that mean? 50% gain potential. If you want to look at it from, yep, she could technically revisit this point of control. But if you want to play it as a breakout, that means where she closed, the risk is 4%. You don't want to see her get below 1820. And really, you got a very, very nice clean trend. The 5, the 10, and the 20 are all in the direction you want, and you just got that bull cross on the daily. So these are the names that I've been liking. I've been watching. Let me go. Let's go back over here. I'll show you some more of these trade ideas that I like. Yep, BA. Can't forget about that. BA just continues to kill. Again, like I've been throwing this out there. So BA is a name that you can continue to buy the dip. Target is the 200 or 242. Netflix has been outperforming, continues to outperform in this channel. Everything looks good. Less confidence, less conviction about Netflix. KWeb, still outperforming. But in my opinion, this could be a major bull trap. We got to wait and see. So I have less conviction here. What I'd like to see is some type of sideways action up here and then a break. Something like this before she goes higher. Just a flag because she's already gone straight, 120% into this level. But yeah, those are the names that I'm looking at. The leader within KWeb is Baba, right? Oh, got to talk about XLF. Again, continues to outperform, broke the major downtrend, back tested that downtrend, flying higher. ADX going up with PPO. This is everything you want to see. And again, monthly, reset to 0, reset to the SMA 50 in a uptrend. Okay, so when anyone tells you that stocks are in downtrends, what they really mean is on the daily charts that they're watching, on the hourly charts that they're watching, they're in downtrends. But if you look at the weekly chart, this thing's been in an uptrend, higher lows and higher highs, all the way back to October, on pretty much every single name. Ever since that October low, you set a higher low, higher high. Higher low, is they going to put in another higher high? We're going to have to wait and see. And clearly on the monthly, this is a long-term uptrend. On the quarterly, long-term uptrend. Now, is that changing? We're going to have to wait and see. But right now, this looks like mean reversion in an uptrend. So that's all I got for you. I hope you like the content. Try to focus on the breadth thrust that we just saw. Try to focus on the fact that it's possible we're at the early phases of a new business cycle where growth will happen. And that's generally what happens when everyone's downgraded, everyone's priced in a recession, everyone's already priced in worst case. If you like the content, hit the like button, share it on social media, and I'll see you next week.